Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Chaz Price. 419-794-3030 is the phone number, and the website is arhq.com. The Fed and interest rates are still a big topic of conversation over on Wall Street. Leon Cooperman has been working in money management for over 50 years, and this was his take recently on Fox Business.
I think those who are looking for 6 rate cuts are smoking some substance. I think if you got 3, you would be lucky. We're heading towards a financial crisis, but nobody knows when it's going to hit.
Now, when somebody says financial crisis, what does that mean to you guys? A significant pullback? Another 2008? What do we make of this talk?
Well, he's exactly right. We are going to have another financial crisis, and he's correct in the fact that at the end of the day, nobody knows exactly when that's going to happen. But there's some steps that you can take really kind of to get prepared for that. And I guess, part of that is taking into consideration this is something that I think you don't want to let it eat away at you, because it is easy to get caught up when you look at the news and there's always somebody saying that, this month, this year, something major bad is going to happen and the financial crisis is right around the corner. Not the way that you want to kind of live, but here's some tips to make sure that you're ready for any type of financial crisis that happens. Number one, have an emergency fund. When we're looking at emergency funds, I think when you're still working and active, the good old advice of 6 months worth of living expenses set aside in an emergency fund is a great idea. As you transition into retirement time, the philosophy that we set up called the independent income system, we generally like to have anywhere from 2 to 5 years worth of money set aside for income needs. That way it's not subject to the lottery of the returns of the stock market. And even in addition to that, maybe having $20,000 to $50,000 set aside in an emergency fund in case you've got to, fix the roof, get a new car, or something in life will happen. Just understand that there will be an emergency. And a lot of times those emergencies happen when it is a financial crisis, right? So I lost my job. That's when that bad thing happened. So having that emergency fund while the economy is still good is a great idea. Know what you own. Really, it's important to consider taking some time to understand what you own and know what your investments are. Number one is if you know how financially sound your company is. If you own stocks that have strong balance sheets, so lots of cash and low debt, companies that are, have a competitive advantage, or companies that are needed on a daily basis, those companies that are financially sound, could be just fine going through it. And maybe you're not going to then freak out or worry or panic as much in a downturn within the market. Also to know that there are certain types of investments that can limit your losses in the downturn of a market. There's even investments that will completely protect you against losses when the market goes down, but allow you to participate if and when the market goes up. And over the years, coaching hundreds of families and seeing hundreds of families, transition through and to retirement, I would say one of the other big things that I've noticed about when times get tough is the families that have reduced and eliminated all of their debt tend to be the families that be in really good shape. But if you're in a situation where money's tight, I've seen some of the stats out there, and I think it was like 47% of people that make even 6 figures are living paycheck to paycheck. So in that situation, you want to make sure you're looking at cutting some unnecessary expenses. Evaluate your budget. Take a look at what some of those unnecessary expenses are. Look for ways to boost your income. That could be maybe taking on another part-time job, doing some freelance work, finding other sources of passive income. Stay informed, but don't watch too much news. You can get caught up in the daily noise of things, but stay informed. If you have like a financial advisor or a coach that you're working with, going to those educational classes and knowing what's happening in those environments, doing those regular investment checkups. Chaz, I know you mentioned on a previous section, while the market's at an all-time high, evaluating what your risk score is and maintaining the portfolio based upon what your individual appetite is for risk, and really take that long-term perspective. But to me, if you go back and you look at the crash that we had during COVID, or if you look at 2008, or if you look at 2000, to me, what you can do is you can be in a position that if you take these steps now, you can turn a crisis into an opportunity. So think about the times that people took advantage of the opportunities of what we saw in the tech wreck of the 2000s, or people that took advantage of the market after 2008, or even the real estate market. The building that I'm in here at America's Retirement Headquarters, we bought it in 2008. So, again, an optimal time to go out and purchase real estate after the market had really started to get beat up. And, turning that crisis into an opportunity can be another great way. So it's a good time while things are going great to get prepared for that financial crisis. Think about how are you going to take and turn that into an opportunity is what I would recommend.
Yeah, no, that makes complete sense. Just in the moment, it's sometimes so hard. When you look back on it, just from COVID 2 or 3 years ago, you're like, wow, that was really a stressful time in the moment. But then as we, look back on it, like, man, that was one of the best buying opportunities of our lifetime. Almost every single significant market downturn that I can remember in my investing history has been a tremendous buying opportunity for stocks. And so, that's a great point. I think you can't predict when those things are going to happen, but you can have a plan for it. And I think a lot of the tools and the technology that we have at America's Retirement Headquarters can help you do that. Technology that we've pretty much developed that will help take out a lot of the emotion and a lot of the think or feel when it comes to being in or out of the market. So for clients that want to ensure something is being done, if we do enter a market pullback, exactly what's being done. And so that's a good question I would have, some of our listeners out there, if you have advisors, ask them, what have we done to protect from another significant downturn? And just see what the answer is and go from there. Because I do think there are some significant risks out there. We've talked about some of them, one being the market's at an all-time high, but kind of reminds me of a book I read. If you're really into, doomsday sort of, you want to see the scenario play out, there's a book called Prosperity in the Age of Decline. And I read this a while ago, and they talk about a lot of the factors I think that we're seeing today, the demographic trends, the fact that the aging population, people are turning 65 at a rate of 12,000 a day. That means there's that many less people in the workforce paying taxes. The debt burden, we've talked about this, we've screamed this from the rooftops, $30 trillion debt is not going away anytime soon. Geopolitical instability, we've seen 2 wars essentially. So there are, and then obviously the environmental challenges that everybody talks about. So there's a lot of risk out there. You can get pulled into the doomsday, theories and what could be going wrong. But to your point, Nolan, I think everybody would agree almost in every scenario when the market's pulled back, it's been a tremendous buying opportunity. But in the moment, it's too late. You can't make a rational decision. The market's down 2,000 points. Your first instinct is to sell. You got to have a plan. You have to have dry powder in the portfolio because we know this is going to happen. And I think that's what an advisor can give you is, a non-emotional, a mathematical, sort of methodical viewpoint to bounce ideas off of so that we don't make those bad decisions.
Yeah, to me, it's, really like running the fire safety drill. So if you're not prepared, you're feeling a little anxious about where we're at, you feel like maybe the financial crisis is right around the corner, before you make a major change to your portfolio, before you abandon ship and maybe move all to cash or do something dramatic, have a conversation with us, have a conversation with an advisor, and we'll help you stay informed and make that decision that can help lead you through this and take a crisis and turn it into an opportunity.
Because I think people understand it is much easier to have that plan, run that fire safety drill when the house isn't ablaze. You don't want to make these decisions, when that next market downturn happens, that next financial crisis. It's not a question of if, but when, how often over the course of your retirement. But if you have a plan put in place beforehand, you will hopefully be able to weather whatever may come down the line. That all begins with a phone call to America's Retirement Headquarters, 419-794-3030. That's the phone number, 419-794-3030. You can also schedule a time and find out more about the team at arhq.com.